Are you surprised that President Trump and Elon Musk are using fake numbers to get their point across?
No.
Okay.
Right.
That's one. Two.
You should not be shocked.
Well, I'm not shocked
I'm
at all.
disappointed.
I was like, wow, that's some bad math. I didn't think you'd go that far, but God bless you. The thing
Explain what you mean by bad math.
Well,
That's what Danny was talking about.
Well, basically what they did was take the ratio they came up to say that Europe is charging us, I'm forgetting the numbers, like 36% tariff rates. It wasn't their charging.
The actual tariffs plus all the
There's no
VAT and all the other stuff.
No, they took like
numbers.
they took a trade deficit divided
Use
by
Vietnam
the imports.
as a better example because Nike shoes are made in Vietnam.
Right.
They're exported back to the U.S.
Right.
Vietnam doesn't buy as much as we buy from them, obviously. So we're going to run a negative trade balance with Vietnam because they can't. So he took the ratio of that negative trade balance, and multiple hundreds of billions of dollars, and divided it by how much Vietnam buys from us. Took that ratio, so it comes out to be what was Vietnam's number? 90 something. I don't know what the number was. Some percent.
Then he cut it in half.
Right, and I'm like, what?
Well, that's good math.
Well, the math, right? That part divided
The math
by
is good. The logic was
anyway. The logic was flawed. So there's no.
It's not a reciprocal tariff. I think that they have.
No, it's not a reciprocal tariff.
But the U.S.
That's
consumers are the ones that have benefited from the outsourcing.
Well, okay, so now I'm going to press that point.
Go ahead.
Okay. So, again, back to when we all went to college.
Yep.
So, the one who made that argument the best was Clinton when he was pushing NAFTA. And he made two arguments. He said, number one, free trade NAFTA is going to improve GDP and it's going to create jobs. And he was right on the former and he was wrong on the latter. So, if you were sitting in the Midwest and you were sitting in some industrial town, you got obliterated.
Yep.
Yes.
And shame on us, the United States. We did nothing to help these people. We didn't retrain them, nothing. So if you're of the view that GDP is just a number, but a big percentage of the country got hurt by all of this. So I have great sympathy for what Trump is trying to achieve.
We all do.
We all do.
Now you may think it's going too crazy. I mean, he just went all in on the poker table. So the question is, we're gonna find out.
The real question
going
is,
to back down?
did he overplay his hand? That's my concern.
Okay, but the problem is you're going from a peak capitalist system at peak S&P multiple
Yes.
to a socialist system, a more socialist system.
I would call it socialist
Mercantilist.
system. Mercantilist would be a better.
Okay. That is not a clean transition.
100% agree.
And so-
and so as Mr. T said, pain.
So could you see an S&P down 50% if like this stuff
No,
doesn't?
I don't see it down 50. But
Oh
I
my
could see
God,
it down.
yeah.
I could see it down 25, 30%.
Yeah.
That's possible from the peak for sure.
We're at
But
almost.
like,
20.
I mean, I'm not saying it's a base case, but like, if this, you can see it down 50% because GDP goes down, multiple goes down, like.
But this desperate search for. So, sorry, I have to do another movie reference, but Hunt for Red October, when the other Russian sub's trying to find Connery's sub.
Right.
And they fire the torpedo, and they put out all the anti-ballistic stuff, and torpedo goes around a rock and comes back, and he goes, "Where's the torpedo?" And he turns to him and goes, "You killed us, you arrogant ass!" And the thing blows up, their own submarine. Feels like we just fired a torpedo, right, to try to fix something.
The only thing I say that is I hope you're wrong.
Yeah, I mean, listen, I do too, but
We'll see.
We'll see.
I mean, like I said, first you can get the retaliation. That's given. China was today. And then in a month.
What would you be doing? I have a question for you.
Yeah.
So we're sitting on the desk right now, okay? You understand history, you understand politics better than anybody. You know how to incorporate it into thought process. You'd be calling some of your people that maybe work in Washington, right, or your political buddies. You'd be calling the head strategists at all these firms. I know you've interviewed a couple of them already to help you make sense. Do you think you would be able to piece anything together based upon that, so they'd have an answer for you that would help you on the portfolio at this moment?
And then apply it to markets.
Yeah.
That's my question.
I think I think that it wouldn't matter who I spoke to. I can't predict. Like I said, I think my prediction is very good. That first it's retaliation, and then people come to the table. But it's going to be at least like a month.
Well, you have to halt you can't impose these things. They have to come off during that month. You can't because
No. They're going to stay on. The tariffs are going to stay on, and the only question is when are people going to come to the table and who's going to back down. That's all that matters. But between now and then, I would have de-risked the portfolio.
That's an extremely volatile market.
Yes.
Totally. That's why
Extremely.
you'd have to de-risk. You'd have to take both longs and shorts, and you couldn't press your shorts.
No.
Because you press your shorts, and that'd be like let's say on Monday Trump comes out and says
Short ban on Tesla.
No, more realistically, he would say something
That's realistic.
that sounded
Progress.
I'm willing to negotiate. I'm getting.
That's what I'm
nice
saying. That has to
conversation."
happen.
And you
Had a great phone call with
had
G.
had a great phone call with anybody.
Right.
And your shorts would
Oh, by
off.
the way, Howard Lutnick's no longer with us. That's his other famous thing that he does. He just off ramps on people. It's like, I don't even know who is
that?
Howard Lutnick. I don't even know who that is.
All right, I think we've beaten this to death.
But I want to say one other thing. And this
go.
Is probably
Keep
not,
going, Danny.
This is probably not
Have it again.
for the audience, and I'll try to make this as simple as I can. I want to say this again about treasuries yields versus credit spreads. And the reason I want to say
So
that
for the audience, explain what credit spreads are, because not everybody
basically
knows
the
that.
willingness, so you have a large pool of investors and institutions that will buy loans that are securitized by Wall Street that are
Not
auto
treasuries.
not treasuries that are auto, that are mortgage, credit card receivables, things like this. The required rate of return based upon what's happening in the economy and the market at the same time treasuries are going down expands, meaning credit spreads are widening. It's such a financialized economy. It has been since 2008, since the bailout. We transferred the risk from corporate balance sheets to the government balance sheet, right? But what makes this economy function are credit spreads being tight, and they're widening dramatically.
So that's the spread between non-treasury
between
debt
risk-free
yields.
and risk,
Right.
basically. And so
risk is getting worse.
right. So if you look at the HYG, there's other things you can look at that people, I'm not going to bother them with it, but I just want people to understand that it creates a backup in the system. So similar to the mortgage crisis, the first thing that happened was we saw firsthand, we were short all the stocks. Companies themselves were originating mortgages, gain on sale, what they can sell those mortgages back to Wall Street for, and they can bundle them and sell them. We hit a point of inflection where the cost to produce those mortgages was higher than what they could sell them for. We knew the game was over. What happened next? Wall Street pulled the credit lines from all of these mortgage companies when they realized they didn't have anywhere to sell them. I'm not saying that's happening because, like I said, the risk is not on the bank's balance sheet. I just want people to understand the plumbing underneath what's going on in the system. It's not just about stock market prices, and it's not just about treasury yields. It's the functioning of a product being processed through the economy. I think it's worth mentioning.
And as long as we're beating dead horses here, just think about how our bearish brains go, right? So one of the things that we talk about is that companies have optimized or perfected supply chains, right? So Nike's optimizing, but what they also did over the past
40 years.
40 years is optimized balance sheet. So optimal debt levels, so you get the optimal return on equity, right? But if you take a company like CVS, the drugstore, they optimized for a normal environment. Well, their sales have gone 45 degrees ski slope downwards, and now you've optimized the debt for revenues, 2 years ago. And in this world where you optimize debt and your revenues go down like they're going to because of tariffs, you're in trouble. And the equity, is at the bottom of the capital structure. And so that's why, you can get a move in the markets much greater than people think. And that's what, if I'm thinking bearish, and
That's what we do.
That's what we do. That's what the risk would be. That I didn't think about that.
Well, we haven't had, I remember in 2007, we started to learn things that we thought we knew everything.
We didn't.
And we found out we don't know everything.
Yeah, no,
so I remember I got a phone call from a friend, and he said, "What's a sieve?"
Right.
And I'm like, I don't know, but I'll get back to you. and that turned out to be an important thing as part of the crisis. What we have not seen yet is the stuff that we don't know.
Right,
We know the
sheet.
tariffs.
We were
know
saying
the
that
impact
yet.
on the economy. We know that's bad. We saw the stock market go down. What we haven't seen is a swan.
Leverage is lurking somewhere. We know that.
Somewhere.
And we will find
Well,
out.
leverage loans are not
Nobody has broken yet.
Yeah.
No.
The market's down. That's it.
I said that yesterday. Danny yelled at me. It's only
Why
been a
would he
day.
yell at you?
It's
Well,
only been a day, right?
Well, funds are getting carried. You'll hear about funds.
No,
being
but
shut
we're
down.
talking about the.
I'm not talking about like some hedge fund
No, I
being
understand.
liquidated. I'm talking about somebody important
Yeah.
Steve,
has something we know nothing about.
Yep.
Steve, there are certain hedge funds that if they got liquidated would be important,
That's fair.
right?
I mean, but places like Millennium are just taking
Well,
numbers down like crazy.
what are Goldman Sachs and Morgan Stanley doing right now? They're telling their prime brokerage group, they're telling their risk group, what are we exposed to? What's going on? What firms have leverage? Take it down. They're sending out. That's the tap. That's what
how
you're
the
seeing right
prime
now. Is the
should- yeah.
And within that, there are product categories. We know how things go. And I'm not saying there's a long-term capital necessarily out there. Long-term capital, had Nobel Prize winners and Black-Scholes were running around into their offices and built the perfect model until it wasn't. And it's always leverage. To your point,
Always
it's the
leverage.
leverage that brings you down, nothing else. Because you can unwind anything without leverage, because all you can lose is what you have.
Right.
But who's holding the leverage? Who's lending against it? Those are the things that you're talking about.
So like when the whole adage of when the tide goes out, you can see who's
naked.
Yeah.
All right. Like I think a good example of that in today's environment. I hate to always go back to it, but Tesla sales were getting killed. And what does Trump do? He rolled out and said, "I'm buying a Tesla. Everyone should buy." And like all the MAGA people were like, "Let's buy a Tesla." Well, they were doing that because Elon's like, "Well, I know I'm helping you with Doge, but my sales are down."
Duke and Duke.
Duke and Duke. My
Margin call.
sales are getting killed.
Yeah.
Right? And so I can only take this for so long.
Right. All right. Everybody take a deep breath.
Yeah.
breath.
Yeah,
That was good. Breath.
that was very good.
That was good.
We had to go bearish.
We
though,
had
too.
to talk about what's going on. Everybody take a deep breath. Everybody relax.
All right.
All right, let's go back in time.